morning, investors and traders. Welcome to our weekly webinar. If you guys can hear me well, and if you can also see my screen, please do give me a sound check and a screen check by saying yes or no. Good morning, investors and traders, and good afternoon and good evening, depending on whatever time frame or time zones you guys are based in. I am based in London, so good afternoon from myself. This is Naeem Aslam, Chief Market Analyst for AvaTrade, and welcome to our weekly webinar masterclass series. In today's particular one, we'll be covering the US non-farm payroll data. If you guys can hear me well, and if you can also see my screen, please let me know by saying yes or no in the chat box so that I know that you guys can hear me well and everything else. Thank you, Mandrit. And I hope that I am pronouncing your name right. And thank you everyone else who has also confirmed. So once again, welcome to our weekly webinar. Today is absolutely important because in about, let's say, 13 minutes time, we are going to get the US ADP data, which is the private employment number, highly important number that we're going to get. And that number is very much going to set the tone, the trading tone for our upcoming US non-farm payroll data as well. A little bit of a housekeeping. I wanted to say sorry and apologize in advance for any possible sound that you may hear, construction sound. There's just some construction work taking place. So if you do hear any noise in relation to that, so do excuse me for it, but we have kept everything to a minimum as much as possible. So how many some people are saying that they can't see my screen. Don't worry about it, you will be able to see my screen now. Let me just share that on the with you guys. There we go. So first thing first, risk warnings and disclaimers are in front of you. If you have any questions in relation to that, please feel free to contact your own account managers. We'll be more than happy to help you to your questions. Brilliant, Matthew. Thank you for letting everyone know on that as well. So if I can get this one right. Okay, so contact details are right in front of you for our social media channel. Twitter is also there, YouTube are also there as well. If you need anything in relation to that, please once again feel free to touch base with your own account managers. Agenda. The agenda is here, and some of the study questions are also in front of you. Importance of US non-farm payroll data. Can some of you, or can someone please explain what is US non-farm payroll data? Because it is something that we do cover on a weekly basis with you guys. So please do let me know if you, for those of you who understand what is US non-farm payroll data, that what is US non-farm payroll data and why it is so important. Get your answers going, guys. I'm seeing some brilliant answers coming from you guys. So someone is saying that this is the US employment data. Absolutely correct. Amutha has always thank you, Amutha, for mentioning that. Amutha is saying that payroll of US employees excluding farm workers. Absolutely cannot be simpler than that. So US non-farm payroll data tells us the health of the US economy in terms of its labor market. The data comes out on the first Friday of every month. And this is the most important data. Why? For two reasons. Number one is that this particular data sets the tone for the rest of the trading month, and of course for the rest of the trading week as well. And number two, this data is watched highly and very closely by the Federal Reserve in the United States. What is Federal Reserve? The Federal Reserve is basically the central bank in America, which sets the monetary policy, and one of their mandate is to keep unemployment low. The lower the employment, the better the economy is, and the Federal Reserve adjusts its interest rate and asset purchase programs accordingly. Now, can anyone tell me what is the current situation? Do we have a hawkish monetary policy, or do we have a dovish monetary policy? Or in other simple words, or in simple English, is this an environment where the interest rates are at ultra low level, or is this an environment where interest rates are at record prices? What do you think? Okay, there you go. James has come back. Brilliant, saying hawkish. Monetary policy is what it is really taking. Matthew is saying dovish. Rashid is saying record prices. Matthew, ultra high. Amutha, yes, interest rates are very low. James is talking about, yes, they are very low, but they need to rise. That's correct, James. Rashid is saying that, yes, they are hawkish. Yes, the monetary policy, which was dovish for the last number of years, is changing its current trajectory, and now the Federal Reserve has become hawkish, meaning they have stopped, or they have slowed down the asset purchase program, meaning they're printing less dollar into the economy. And at the same time, there is ample conversation and chatter on the market which is indicating that the Federal Reserve is going to increase the interest rate. Now, what does that mean? That means that if you are holding a mortgage, you will see in the United States your mortgage going up, and the similar move could also be very much be expected from the Bank of England, who has its monetary policy tomorrow, and of course the European Central Bank, but that won't be increasing its interest rate. So right now, because of this increase in interest rate, we are seeing a higher dollar. Now, what makes the US NFP reading? Now, what makes the US NFP reading more important, or how you can predict the US NFP reading is going to be, or how it is going to be? One of that component is very much going to be coming today, and that really is the US ADP data. Now, where can you find the US ADP data, or how to find the US ADP data? Here is something where you can actually go and find the ADP number, because these numbers, they come just before the US non-farm payroll data. So Forex Factory is a pretty decent site which really kind of gives us that sort of an information. And as you can see over here, 1:15 p.m. my time, London time, ADP non-farm employment change number is going to be coming in. Now the forecast is for 185, while the previous number was 807,000. Now, obviously, the bar is set very low for this particular month because of Omicron, because of the COVID variant. So traders and investors are expecting the number to be on the low side. So the chances are that we will easily be able to beat this particular forecast, which is over here of 185. So that is what we are expecting. Now, if the actual number comes in lower than this, then we are going to see a big problem with that one. But if we see a number which is going to be a slightly higher than that, or better than that, then we are going to see a stance or a Federal Reserve or market players or investors thinking that whatever the Federal Reserve is doing right now is doing the right thing, and that is that they are on the right policy to control inflation, increase interest rate, and then bring the monetary policy back towards its normality level. However, if this number comes in lower than 185, now remember, the bar is already set highly low. So if the number comes in even lower than this one, that is going to create a huge panic. We are likely to see a big sell-off in the market. We are likely to see gold prices moving to the upside, dollar really plunging, because traders will start anticipating and speculating in the market that the Federal Reserve is completely wrong with respect to its monetary policy, and the interest rates should not be going up anytime soon. The Federal Reserve should not slow down the asset purchase program or the money printing program that aggressively, it should slow it down gradually. So that would be the sort of a conversation that we'll be hearing in the media. So that is something that we are, we need to kind of keep that in our mind when we go into this particular data today. Now, what else? Now, what instruments to really trade on the back of this particular data? Of course, we're going to keep an eye on, because very soon we're going to get those ADP numbers and we will see that. So what instruments to really trade? You can trade anything. You can trade equities, you can trade Forex, you can trade commodities. And by commodities, I mean really gold. We will see a massive volatility coming into the market in less than 4 minutes when this particular data will hit the terminal. And of course, we will see the equity indices, the US 30, which is the Dow Jones 30, the US 500, which is your S&P 500, and of course the NASDAQ, which is known as the US Tech 100 Index, all of them moving up and down very sharply throughout the day. So we will see when the data will hit the terminal, we're going to see a lot of volatility coming into the market as we will speak, as the data will really hit the terminal. Now, of course, after that, once we have gone through that, we will look at the state of the market analysis before we will define some levels for the upcoming days as well. Now, let me once again bring out the let me actually bring out the MT4 platform so that we can do analysis on the live market. Of course, we are going to see a momentum or a movement in terms of a Bitcoin as well. We will see the Bitcoin prices seeing some sort of a volatility. Now, to see everything else, what we're going to do is we're going to look at the US 30 index. We're going to see where the US 30, the S&P 500 index is currently trading. Now, currently, what we really see is the S&P 500 index has crossed above the 200-day simple moving average. It has crossed, it is about to challenge the 100-day simple moving average, and it's still quite far from its 50-day simple moving average. The massive sell-off that happened over here has pretty much ended right around these particular price levels. Now the market is kind of moving back to the upside, and traders are hoping that this trend will continue. But if the data today fails to impress the market, we are going to see a rollover in this particular market. Now, if that rollover happens, where are those important support and resistance zones? Now we're looking at the daily time frame. From the daily time frame perspective, the immediate support zone is going to be right over here at the bottom of this particular 2 days, this particular candle. So right over here is your support zone. Your resistance for now, we can move this particular resistance level to over here as well. So just on top of that massive sell-off that happened, that took the market down. So that is for the S&P 500 index, sorry, Dow Jones Industrial Average Index. Now for the NASDAQ, we are still below the 200-day simple moving average. So, you know, the momentum isn't really that strong. Again, the support zone is going to be just at the bottom, the recent bottom, which was pretty much formed, and we will change the color of that as well. Now, what are we going to do quickly is we're going to change everything to 15 minutes to see the market's price action quickly, because the market is about to come up with its numbers very, very soon. And I'm going to change this one to 15 minutes as well. And I'm going to change the gold prices to 15 minutes as well, because that is where we're going to see the massive momentum coming in. Now, let's go back to the markets. Let's go back what exactly is happening with the data. So in about 20 seconds or so, we will see the ADP numbers coming. Remember, we are expecting 185,000 as a forecast. The previous number was 807. These are the opportunities. If the number comes lower than that, we are highly likely to see gold prices shooting to the sky. Really big aggressive moves are really coming. There you go. ADK came up at minus 310K. So very, very low number. So I know it hasn't updated over here, but minus 301K. So we actually lost jobs at a record pace, really. So that just shows that how weak this particular economy is. And see that big momentum really taking place over here, the big move really happening in terms of the gold prices. Even to see a little bit more, we can go into the 5-minute time frame, and the 5-minute time frame shows you even more bigger bigger moves. Now let's look at the S&P 500 index and of course the Dow Jones Industrial Average. So what we are seeing over here is a very little move, not much really happening in terms of here what's happening with the Nasdaq or the US Tech 100 index. The US Tech 100 index isn't really moving that much as well. So the only momentum, only big momentum that we are seeing currently is really in the over here in the gold prices. Now, of course, we will be looking at the GBP USD as well. So what this one shows is also the big momentum, the big moves are also taking place over here as well. But how are those moves happening? Those moves are showing that yes, the market is sort of moving to the upside. Dollar is a weak currency. We're moving to the upside. So a similar scenario. So what is the overall takeaway from this particular number? The overall takeaway from this particular number really is that coming on Friday, the tone has already been set for this number to go extremely low. So we are expecting the number on Friday, the US non-farm payroll number, to be extremely weak. And this means that the current momentum that we're seeing in the gold prices, whereas the gold price over here is very much going to be similar as well. Now, of course, I am a little bit surprised that why are we not seeing that particular move in the equity market, because we should see pretty big moves in the equity markets as well. The equity market hasn't fallen that much. This is definitely something a bit of a surprise in terms of the market. But if we look at over here for the BTC, we do see the BTC prices moving to the downside, you know, because BTC is now considered as a riskier asset. So on the back of this particular data, we are seeing the sell-off happening. Now, let's define the levels in terms of the market and then what to expect. Let's just have a quick look at the S&P 500 index as well, how that has performed. The S&P 500 index is also trading to the downside. We did see some momentum coming to the downside, but not really massive big moves really happening. But now, generally speaking, this particular gap, which was left out yesterday, is more likely to be filled out now, given how the prices are going to be trading, because now the general trend in the market is going to be to the downside. Now, what to look for going into Friday's particular into Friday's number. So here is something that we're going to be looking at. Now, on the daily time frame for the US 30 or the Dow Jones Industrial Average, we know that the bulls are still very much controlling the momentum because the price is trading above the 200-day simple moving average. But things are not that simple, because we need to also pay attention to the 4-hour or the intraday time frame. The intraday time frame is indicating to us that the prices are trading above the 50 and the 100-day simple moving averages, which is certainly a very positive indicator. But prices are failing to stay above the two particular. If the price fails to stay above the 100 or the 50-day simple moving average, we will have a serious issue. Even if the price breaks below the 100-day simple moving average on the 4-hour time frame between now and Friday, we are likely to see a confirmation. That would be a confirmation that prices are moving to the downside. So let me repeat that. Let me make it very easy. Now, number one is that we know that the tone is set for a disappointing number on Friday. How? Because the ADP number was extremely disappointing. Now, in relation to the S&P or the Dow Jones Industrial Average, if the price falls below the 100-day simple moving average, we are likely to see this sell-off getting more, the sell-off becoming more intense, and likely to see the prices moving and coming into this particular area. On the flip side, if the price continues to stay above the 50-day simple moving average, that would be a further confirmation that the prices are likely to continue their journey to the upside, and we are more than likely to see a momentum where the prices will move to the upside, and that will continue. things that we kind of need to make sure that we pay attention to. Now, does that make sense to you? Do you know? I wanted to understand. Do you guys understand that why are we expecting a lower number? Okay, Henry is saying that gold is going down, so has gold changes direction? Yeah, okay. I mean, it has come off its highs, but it's still holding on to its gains. Now, there is a possibility. Basically, the stance in the market, because obviously we're not watching the media right now, but the stance in the market still very much is that the Federal Reserve is going to increase the interest rate. Hence, we are not seeing that continuation of that trend, because we remember some of the Federal Reserve members already pointed out that be ready for a disappointing US non-farm payroll data coming this Friday. So a lot of Federal Reserve members, they already know that the data is going to be a disappointing one. Yeah, so this is why we are seeing the continuation of that particular trend, which is quite an important one to pay attention to over here. James is saying gold is very volatile and you can't predict. That is correct, James, that gold is highly volatile. What is gold? Gold is a hedge against riskier assets, meaning when people are not taking riskier assets on board, we would likely to see gold prices moving to the upside. When people are actually taking risk, we will see gold prices moving to the downside. Gold is also acting as a hedge against inflation. When inflation moves higher, gold prices move to the upside. When inflation moves to the downside, gold prices also move to the downside as well. And now, as you can see, because we didn't see the sell-off in the equity market, that risk of rally is not really playing in. Because had we seen a massive sell-off in the equity markets, we should have seen on the back of that gold prices really jumping to the upside. Gold prices really seeing some serious momentum, and that is not something we have seen. Hence, we're seeing that little bit of a hesitance here. But one thing is for sure, the data has set the tone for a disappointing number coming Friday. So on Friday, we are not expecting a super or an even strong number on Friday. Now, of course, always have that element of surprise. If we do have that surprise, then we could actually see the market showing enormous amount of volatility. Now, let's define levels for the market, for the S&P, for the Dow Jones Industrial Average. We have done that. What about the US Tech 100? Because this is what we haven't done it. Now, when it comes to the US Tech 100 or the NASDAQ, the levels that we'll be very much watching in terms of a longer time frame is, of course, this one as your support level. Now, for those of you who already know that, who know me, we always have red lines as your resistance. So we're going to move these ones over here as our resistance. And for our support levels, for our support lines, we're going to put 2 more lines, and we are going to change the color of these lines into green, because we want to have that differentiation when we're looking at the prices, when we're looking at the chart, that which one is our support, which one is our resistance, so that we don't get boggled with because there's so much information already in the market. The last thing we want to do is get disturbed with that. Now, of course, this is the better level, much better level of support. Now, for intraday perspective, from an intraday perspective, another better level from support is more likely to be coming just in around this particular price level. So let's just leave these ones over here actually, and we can put another lines over here. So on Friday or before Friday, watch these particular price levels, because if the price breaks or comes into this one, this could be an area of support, an area where prices can once again bounce back if they lose their current momentum, which are likely to happen. Because on the 4-hour time frame, look at the RSI. The RSI is showing us that the prices have already been overbought, so we are likely to see a momentum moving to the downside. So that is something that we need to see in terms of the price action to see. a support zone. We are expecting the price to come over here, and we could potentially buy it. But as long as the price stays above the 150-day simple moving average, if it breaks even that particular level, the next support level is going to be where the 50-day simple moving average is trading on the 4-hour time frame. So on the daily time frame now, we have 3 different levels: level number 1, level number 2, and level number 3, very clearly defining us different buy opportunities, different opportunities where we can really look at. Now let's move on to the last one. And the last particular one that we are looking at in terms of the price action is really the daily time frame for the US 500 index. The US 500 index, or the S&P 500 index, is showing still quite a lot of strength. Now again, we're going to go into our 4-hour time frame, and this is where we're going to define our price levels. So the first level of support that we'll be picking for moving average is trading. So it's really in around this particular price level will be our first support zone. Even after that, the next support zone, if that one doesn't work, then it's going to be right at the bottom of these particular ones, hoping for that bottom to come in, because on the daily time frame, what we could expect really is that prices coming to the downside for if they fail to break above over here and then come in over here and form a double bottom. A pattern comes over here, it forms it like that, and then we already have the first bottom, and after that price moves rapidly to the upside. Now that could potentially happen, but at the same time the price can come over here. We already have a one bottom forming around this point, and we have another bottom forming around that one potentially we could have, and then again that momentum to the upside can really take place. So watch these particular price levels going into this US non-farm payroll. Once again, to summarize, what really has happened is the US NFP data is coming out on Friday. The tone is set for a very weak number. And that means that on Friday we're going to see not a strong number, and we've defined our price levels in terms of the equity indices. One thing that we haven't defined is gold prices and where are the important price levels for gold prices. Now for gold prices, the important price levels that you wanted to pay attention to is that 1780 is the first support zone that you wanted to pay attention to. Gold prices have started a downtrend. If the trend can change its direction, only and only if the price breaks above these particular moving averages, especially the 250, especially the 50. If it breaks above that, if it breaks above these particular lines, we can say that yes, now the upward trend is going to begin. If there is no upward trend, the prices are likely to move to the downside. All right, folks, I hope this was very helpful for you guys, and I wish you guys good luck for the upcoming US non-farm payroll. Yes, Matthew, you're absolutely, bull trap is what is pretty much forming over here. Good luck to everyone with their trading. If you have any questions, feel free to engage on my Twitter, and I'll be more than happy to answer those questions to you. In the meantime, stay safe and see you guys